Hello and welcome to IB Times TV. I'm Leanna Brinder, business editor for the International Business Times. Joining me now to talk about the Scottish referendum are two financial experts from Vedanta Hedging. So hi, thanks both for joining us.
Thank you.
I'd like to kick off with what have been the biggest concerns coming out from your customers in terms of how they can hedge their FX rates?
Sure. I mean, look, the whole point of hedging your FX risk is to try to reduce uncertainty in currency movements. And unfortunately, what we're seeing is more uncertainty than these companies have ever faced before. So they're having real concerns with regard to what kind of currency they're actually going to be importing and exporting with, how long should they actually hedge their risk. And normally these decisions are taken sort of 6, 12, 18 months ahead. But it's very difficult for these corporates now to make those decisions because they just don't know what the position is going to be in that time frame. So unfortunately, it probably means many of these corporates won't be hedging their risk as well as they should be.
And that uncertainty has created indecision. People haven't been able to decide which direction their strategy should go in, if at all. They have no idea what currency they're going to be trading in, whether the existing contracts are going to be null and void. So it's created uncertainty and as a result fear.
And what advice would you give them for right now, just before people go to the votes, on how they can hedge their FX?
It's a really difficult question because we don't know how the vote's going to go. We also don't know what the implications are going to be of whatever the result is. I think very simply trying to keep as flexible as possible, and as part of that probably trying to stockpile cash. I think businesses are doing that already, but they really don't know which way they're going to have to jump once the decision is made.
I mean, the last month before the referendum has been almost a real game changer in terms of people seem to be swayed more to the yes vote. Can you tell me a bit about how the markets have reacted to that, and as a customer, how that would impact them?
Well, in very simple terms, the most transparent way of seeing that is seeing what's happened to cable, sterling dollar. It's literally moved almost 9.5, 10 cents in the space of a week or so, which is almost unprecedented in recent times. So if you're a buyer of dollars, suddenly you're buying it from 169, you're buying it like 160 levels. It makes a massive impact. And that's the financial markets basically saying, hey, look, we are now afraid, or we are more bearish on the pound.
There's been a lot of negative sentiment in the market. There's a sell-off of sterling. Bond yields are changing. But I think also at the smaller end of the market, for small businesses, they're seeing the sort of repercussions through people saying, well, we want to wait to see what happens before we decide if we're going to award that contract or not. So there's market implications, and there's sort of real business day-to-day implications as well.
Okay, if you, what would you say to maybe company owners that have a lot of exposure by trading with maybe Scottish companies, or have a company up in Scotland?
Unfortunately, it is really difficult to give them sensible advice because there are so many political variables which will affect the economic variables. For example, there's no point talking about how you hedge your FX risk if you don't even know who your banking facilities are going to be with, because actually the bank that you've been with actually may no longer be accepting your business and may no longer be able to do FX transactions with you. So you've actually got to find out what currency are you dealing with, which bank are you dealing with, then you can start dealing with how do I manage my FX risk.
Let's say Scotland did become independent. What would be your bullet point plan in helping your clients as soon as the results come out? What would be the immediate few bullet points in helping them, hedge their portfolio?
There's 18 months of negotiations to be had, and I suspect the Treasury will be on the front foot by making a statement that they will stand behind the Scottish debts and that sort of thing to begin with. So they've got a little bit of time on their side, but it all comes down to what happens in terms of currency union in the end. Is there going to be currency union? Will it be a pegged currency, or will Scotland have to go for the euro, or indeed another currency? So it's pretty uncertain, so it's going to have to be short-term and nimble, I'm afraid.
Well, interestingly, I mean, the FCA said yesterday they've made basic contingency planning. To be honest with you, we've only made basic contingency planning as well. I mean, obviously we don't provide the transactions to the clients, we just advise on them, but we do have a number of clients who've entered into long-dated FX structures. So we are kind of dependent upon deciding on what the banks are going to be doing, and then accordingly we will then be able to advise the clients to say, actually, should you close this position today and take a hit if necessary, or is it worth restructuring it, which we will then advise them on accordingly.
So I suppose lastly, the major topic that has, I suppose, dominated the political campaigns, what's going to happen to Scotland's currency if it did become independent? We've had the S&P saying that they'll keep the pound, whereas all political parties have said that is absolutely not going to happen. So what are your thoughts in terms of Scotland keeping the pound if there's no political union behind it?
Actually, it's a very important question, and that's why Mark Carney in the last 24 hours has said, actually, a currency union wouldn't work. And the simple reason for that is for a currency union to work, it's based on the economic theory of an optimal currency area. You need to be able to have control of your fiscal policy too. So you can't have that currency union unless you've actually got control of your fiscal policies. So that's why actually the government or the Bank of England is saying it's unworkable. So unless a solution is found to be able to have fiscal control as well as monetary control, it's not going to happen.
It's very difficult. If you can have a currency union, but there's got to be political union and will and fiscal policy's got to be joint. But it could be that Scotland ends up with the pound effectively as a peg currency and loses control of its fiscal policy, which kind of makes me question why independence at all.
Great, well thank you very much.
Thank you.